In less than 24 hours, Bitcoin will be closing another monthly candle. In today's video, we're going to be going over the macro charts, discussing them from a technical and structural perspective, as well as diving into the smaller time frame price action, discussing the next move. Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. As we said in the intro, Bitcoin has less than 24 hours remaining until another monthly candle close. In today's video, we're going to be discussing the significance of this monthly candle close, what it means for the macro price action, and so much more. We're also going to be going over the weekly and daily charts, discussing the key levels you should be watching out for and the strength of the overall price action. And finally, we're going to finish up discussing the smaller time frame price action, going over the current breakout and even smaller time frame in regards to the next move for Bitcoin and what is actually developing. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant news events. No hype, no BS, no emotion, pure raw TA. That is the kind of content you are interested in. Join us on Telegram. It is the second link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency. Posts will resume in this channel tomorrow. Moving on, if you're interested in our trading signals, you can find our VIP channel. We post exact entries for trades, exact stop losses, exact targets, everything you need. You can see our trading results for last month came in at around 80% win rate. We had 30 trades, 24 wins, and 6 losses. If you're interested to join our channel and our group chats with all our members trading and learning, you can go ahead and contact me in the pinned comment in the free channel for more information. Let's go ahead, guys, and jump into the video, as there is quite a fair bit to be discussing. Starting on the market data, 24-hour volume is up 78%, coming in out of the weekend at 50 billion. Liquidations are very high, up 227%, sitting at 62 million. Looking at the overall liquidations, we can see we had a significant amount of longs liquidated and a reasonably large amount of shorts liquidated. On the price action chart, we saw a steady breakdown back to the retest of the 29k level. If you watched yesterday's video, we're discussing how we saw the weakness developing on this chart, and we were expecting a break towards 29k. We did in fact see that. However, we have since bounced back into this channel, and the rising channel is still intact. We're discussing in today's video the next move for Bitcoin and what this does actually mean. Moving back over to the data, the volatility index is still at an all-time low, sitting at a 4-year low, all the way down just under 1.3% on the 30-day, and on the 60-day, we are sitting at around 2%. Again, we haven't seen levels of this low volatility for many years. Around July 2020 was the last time we saw the volatility index this low. And in fact, if we look at the overall volatility index on the 60-day period, we haven't seen it consolidate and compress like this for an incredibly long period of time. The last time we saw something like this was all the way back over here in around 2021. So pretty interesting stuff to be watching the volatility index. Again, with falling volatility, dropping price action, this is a pretty big sign of compression, a pretty big sign of exhaustion, a pretty big sign of weakness. But a silver lining behind all this is when volatility does spike again, it is going to be violent, it is going to be quick, and it is going to result in an aggressive move. So it is something we are definitely watching out for. Moving on to the DXY has opened up green and it is retested and currently found the 101.5 level as a temporary support. Back above our current 1-year long support level sitting right over here. Again, for a breakdown, we are looking for a loss of this lower support once more for a continuation back down here. Until then, the trend should continue upwards to retest our dotted trend line. If the DXY breaks above the dotted trend line, that will most likely send the markets downward. If the DXY breaks below our lower support level into this range, that will most likely send the markets up. Looking at the economic calendar, we can see our key interest rate decision has been passed. We are now looking onto our future events, such as The 4th of August being NFP and unemployment rate. Looking on the 10th of August, our core inflation and inflation data. These are going to be very, very leading in regards to the possibility and probability of future interest rate hikes. So we're watching for the information here, we're watching for the data, and that is going to directly impact the direction of the DXY for the coming month. Looking over into the stock market, we can see the S&P 500 is still up around this 4,600 level, still consolidating above, unable currently to break above this current local high resistance. A very key level of resistance. A break above this level will be invalidating this uptrending resistance level. Breaking above 4,627 is essential for a continuation upwards. Until then, resistance is resistance until it is not. Moving on to the Dow Jones, a very similar thing occurring, that respective resistance being around 35,500. You can see it is currently being retested right now. Again, our current uptrend is still intact and the price is expected to continue upwards until the price breaks below our uptrend. If the uptrend is lost, the price is more likely then to continue on a higher time frame toward the downside. Until then, resistance is resistance until it is not, so expect potential rejections or weakness at these levels. Let's go ahead and jump into Bitcoin, and we'll start on the high time frame and break it down to the smaller time frame. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 US in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So coming up in 20 hours and 48 minutes, we have yet again another monthly candle close. Now, a monthly candle close is pretty significant, but it is not the be all and end all for Bitcoin, and we're discussing why. If we take a look at the macro price action right now, the overall macro price action is bullish. The overall uptrend is intact, but we are not quite yet in a macro uptrend. We are still very much in a reversal period between the prior bear market over here and the upcoming potential bull market. We are still in this overall reversal phase. If we take a look at prior cycles, particularly the low points of those cycles, those low levels of support in the prior bear runs, we can see these horizontal levels mark 1 year long plus support levels. When they are then lost, the price capitulates and creates a new low. We have seen that in the prior 2 cycles. In fact, we have even seen it in the most recent cycle, the 2021-2022 correction. We saw a hold of around a year along this lower support. We have seen a breakdown to a new low, and then we come up and retest that level. Now, in the prior cycles, we have seen 2 things play out. We have seen a monthly candle close above this horizontal level result in a continuation upwards to our dotted trend line. We saw that in 2016, we saw that in 2019, a monthly candle close above that level pushing up to the dotted trend line. If we take a look at a different indicator called the Gaussian channel on the weekly chart and correlate those date points to those breakout points, we can actually see very, very similar indications on this chart as to the 4-year cycle. When we break above the monthly candle on our horizontal resistance on our monthly chart, we actually also break out of the Gaussian channel. Upon the breakout of the Gaussian channel, the price moves upwards to retest that dotted trend line, which is going to be that dead cat bounce high point of that prior bull run top. We saw that in our 2014 cycle, and we even saw that over here. If we go ahead and delete all this, we even saw that over here in the 20 2019 cycle upon the monthly candle close, a breakout and continuation up to retest that dotted trend line. So the monthly candle close is very significant, but it is not the be all and end all. What is very important is that even if we close this current monthly candle below 30,000, which is going to be incredibly likely considering where the price action is right now, the most important thing is that the price on the weekly chart does not fall back below the Gaussian channel upper band, which is sitting at 28.4K. If we look at the last two scenarios, every single time we saw a breakout of the monthly level, we saw the breakout of the weekly level, and we continued upwards above the Gaussian channel until we reached that dotted trend line. Therefore, in the same scenario, this instance, we should expect the price to remain above 28.4K until we push back above to this level, where then we can come back down and break through the Gaussian channel upper band. If we lose a Gaussian channel upper band prematurely to retesting that high point, that could cause a significant shift in the macro direction and potentially push Bitcoin into a weekly bearish downtrend. So the monthly candle close, although it is significant, the point of where it closes is more important. And that particular point we want to keep the price above is going to be 28.4K. So watching for that, guys, very important stuff. Let's go ahead and move on to the weekly chart. We discussed very briefly in the other video, we have an incredibly important level, which is going to be our parabola. Our parabola is our parabolic curve represented by this blue trend line. This level is not only a current resistance level, but is going to be acting as a trigger point for a continuation upwards. If we zoom out to the daily chart really quickly, we can see a very key level of resistance on the daily chart is going to be that major $32,000 level. You can see right over here that $32,000 level is represented by this upper level of resistance. If we do zoom out even further, we can see above 32,000 we have a massive volume gap, our VRPV gap, all the way to about 38 to 40K, which is our next resistance level. So for the price to continue upwards on a macro scale, 32K does need to be broken. So what are we looking at the parabola for? If we take a look at the parabola converges downwards actually through and below 32K. 32K is over here. The parabola is much lower. So what does a parabola represent? It represents a trigger point when, if broken, will increase the probabilities of a break through 32K. So we are watching for a break of the parabola for an increase in the probability of a continuation to retest and to break through 32K. In fact, this would signify a flip of the current downtrending resistance and downtrending compression we have. This cluster of price action here is a cluster of price action that represents decreasing momentum. We can see on the RSI, decreasing volume. We can see it on the volume data, decreasing volatility. We can see it on the volatility index is a representation of weakness at resistance. So for a weakness to flip into strength, we need to see the metrics turn bullish, and for those metrics to turn bullish, we're most likely to see it occur above that parabola level, above that parabolic trend. So watching out for an early indication of a continuation up to break through 32K would be the breakout of that parabolic curve represented by that blue trend line. If we go to the weekly chart, we do still see some signs of weakness. Some warning signs are very much present. Warning sign number one is going to be how close Bitcoin really is coming to that upper band of the Gaussian channel. Like we said, 28.4K is an incredibly important level of support on the weekly chart that represents, if broken, a shift from weekly strength to weekly bearish strength. Okay, this is weekly bullish strength, this is weekly bearish strength. Very important we make one distinction. The weekly trend for Bitcoin is intact until the price breaks down below this uptrending support level. So the weekly trend is intact while it remains above this weekly uptrending support. However, the strength of the trend can flip bearish prior to the trend flipping bearish. So at what point does a weekly trend flip from bullish to bearish? It will flip in terms of strength bearish when the upper band of the Gaussian channel is lost. When 28.4K is broken, that is when the strength flips from positive to negative, and then that increases the probability of a continuation down through that support level. If we are watching for the specific point in time where the uptrend turns into the downtrend, that is going to be if this level is lost. So watch out for that again. Moving on back over this chart on the weekly chart, we can see the RSI is signifying weakness, right? We can see very clear weakness in the RSI. Every single time the RSI breaks below from the top side down the 62.0 point on RSI, we see a correction. Every single time we have seen it in the last 7 years, every single time without failure, when the momentum has shifted from strong positive to weak positive, we see a correction on the scale between 20 to 70%. Now, obviously, we're not going to see a 70% correction. It's very unlikely. We have seen that in bear market cycles, but in context to the current price action, we could definitely see a 20% correction if this does play out, particularly if Bitcoin does fall below this uptrend. Let's take a look really quickly. We have seen the price action on the RSI fall below the 62 point. Over here, we saw a pretty decent correction, guys, of around 20 or 22%. If we go back in time, we saw the same thing happen over here. We saw a correction, our bear market cycle. We go back in time, over here, correction 50%, correction 19%, correction 47%, correction 80%. So we can see every time it happens, it does lead to a correction. The reason being is momentum is a leading indicator for price action. If momentum is weak, if momentum is shifting from positive to negative, it is an indication that the metrics, the volume is drying up, the velocity is drying up, okay? The bears and the bulls are starting to battle and the bulls are losing strength. The buying pressure is being lost. When we see those things occur at resistances, the probabilities for rejections increase. And when we're looking at a macro scale, the swings between uptrends and downtrends, the swings between corrections and consolidations or expansions are greater percentages. We see larger percentages moves on the higher time frame than we do on the smaller time frame. So it's a good indication of what is to come, and it definitely is something we're watching for. So we've given you a scenario here of how the price could push lower, and we've given you a way out. We've told you the higher time frame is looking weak, it is exhausting, there are indications that could compress and result in a continuation downwards. We've also told you over here, if we do see the price break above this parabolic curve, that will then flip the momentum positive, that will then shoot the price upwards over here. So we're not just saying bears are in control, in fact the bulls are still in control while the price remains above this trend, but we are starting to lose strength. Now, it is very obvious the price has been rejected for quite some time, and of course on the higher time frames, this correction now is going to be showing up as weakness only now, because it is lagging. But it's something to keep in mind, guys. So watch out for those two key levels. Moving on to the small time frame, very interesting stuff. First and foremost, we have seen, let's go ahead and bring it up. We have seen a breakout of the current downtrending resistance for Bitcoin. This is in fact going to be a confirmed breakout in 37 minutes, okay? Once this candle closes. Then we will have the confirmation of both the RSI, so momentum flipping positive, and the price action breaking above our downtrending resistance, indicating we are now in a sideways compression for the next move to continue upwards, or again, if we reject and continue downwards. So how can we tell where the next move is going to go now that the overall downtrend is technically busted? Well, we have to look at a smaller time frame. And as we said in yesterday's video, the smaller time frame price action or smaller time frame extensionary structure holds more precedent over the entire structure on the higher time frame, as it's going to determine whether or not the breakout is a fake out or a breakout is going to turn into a continuation. So moving on to this trend line, we can see the respective trend line is on this chart over here. We can zoom out to show you that is our respective trend line, it's downtrending resistance. On the smaller time frame, we have a rising channel formation. The rising channel formation is a bearish pattern. It is a bearish pattern, although the price has broken down from a downtrending resistance, the price action is still within the confines of this overall rising channel. And therefore, the rising channel is still in play. It is still relevant, it is still important. The key structural and horizontal levels, the key diagonal triggers are still important. So let's take a look. From a rising channel perspective, the rising channel perspective is bearish. The measured move target from a breakdown is still going to be this lower level indicated by this red box. We're still looking for that if this level is broken down. For the bulls to invalidate the rising channel, The price needs to reach our liquidity level of our prior resistance sitting at 29.6k, and it needs to break above that level. It needs to invalidate this high and turn this entire cluster of price action into deviation to continue upwards. If we see that, if Bitcoin is able to break above 29.7k, we will most likely see a move to 30,300. Why 30,300? 30,300 is the POC level of the prior horizontal consolidation. This is our key level of resistance. In fact, 30,300 to 30,400 is an incredibly important bullish trigger. Meaning, if the price is able to break above 30,300 to 30,400, the price will continue upwards on a higher time frame and most likely do two things. Number one, flip the momentum on the higher time frame on the weekly chart bullish again, and number two, break the parabolic curve on the weekly and daily chart, resulting in a high time frame continuation back to 32,000. So very important level over here. This is going to be very telling for the high time frame direction for Bitcoin. But until we reach that, we are still within the confines of this current bearish structure. So let's break it down to a smaller time frame. Looking at the current bearish structure, guys, we can see we're retesting a midline. If we do come up over here, this is going to be an opportunity to open shorts. This is the liquidity level. Resistance is resistance until it's not. You can look for shorts on this level with very tight stop losses for moves back towards this level over here. That is what I'd be personally looking for. Option number two is if this level does get invalidated, we are looking for continuations upwards. Option number three is if we break below this trend line, you can take shorts with very tight stop losses, looking for these lower levels. Again, keep your stop losses very tight above these POC levels. I'm going to leave it there, guys. My voice is completely lost today. I don't know if you can tell I'm talking a little bit quicker. I've been talking all morning with my partner, so my voice is completely busted. But thank you for tuning in. I hope you have a great day, and we'll catch you guys in tomorrow's video. The monthly candle will be over by tomorrow. So we will have known the result of the monthly candle. We'll most likely know the result of this consolidation, and will be a lot of new stuff to talk about, particularly going into the coming month. So I hope to see you guys tomorrow, and I'll see you guys then. Have a good day.